Wednesday, May 15th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning, I want to focus on whether the current trade wars are a cover for a global monetary reset. It will be like a part 2 of a video I did in April of last year entitled, "Are the Trade Wars a Cover for a Global Monetary Reset?" I'll put it up in the cards below in the description if you want to watch that one. Why am I talking about this now? Am I trying to peddle gold, sell gold? Some of you think that all I want to do is sell gold. No, I think it's much more important than trying to sell gold and make some money off selling gold. It's more, it would be a historic event in my opinion, just like 1971 was a historic event in a negative way in my opinion, when President Nixon suspended the convertibility of the Federal Reserve note, aka the dollar, into gold temporarily. And we've been, this convertibility, which was allowed under the Bretton Woods gold exchange system, it wasn't a gold standard, has been in suspension since then. It's going to be 48 years in August. So going back, having a monetary reset and allowing convertibility of currencies into gold again would be a great thing in my opinion. It would anchor currencies. It would depoliticize the economies, because that's what gold does. It makes things neutral. You have to actually earn your way in the world. You can't just print. And that's what the problem has been with printing. And the U.S. having the privilege to print the fiat currency has been running huge trade deficits, huge budget deficits internally, huge debts, and so has every other major country. And I want to touch upon also a video I did called "The Gold Standard is the Only Solution to the Trade Deficit." Granted that Bretton Woods was a gold exchange system because only the dollar was backed by gold, but all the other currencies, of course, were pegged to the dollar, so indirectly they were under a gold standard. And why am I talking about this now? Well, there's been recent speculation in the news. I think Bloomberg reported this, that Donald Trump is considering nominating Judy Shelton, who's an economist who advised the Trump campaign in 2016, leading up to the election. She was an economic advisor. And in both my videos, or especially in the one, "Are Trade Wars a Cover for a Global Monetary Reset?", I talk about Judy Shelton. And right now, there's speculation that she's going to be one of Trump's choice as Fed governor. Trump still has 2 people to nominate as Fed governors. Mish here from moneymaven.io says Judy Shelton, Trump's next Fed choice, favors a gold standard and free trade. So before I go into my thoughts on this, I just wanted to show you a chart of the United States trade balance, and this is from Trading Economics, going back to the 1950s. And you can see there the zero line. That's when trade is balanced. And if you noticed, up until the early 70s, it was pretty much balanced. The U.S. did run a deficit, but it was near zero. As you can see, ever since the United States under President Nixon suspended the convertibility of the dollar into gold, those deficits have grown, and it's been one way. I know there's been ups and downs, but as you can see, the U.S. has abused this privilege. And who wouldn't? I wouldn't blame the United States for doing that. So what does that mean? The U.S.'s biggest export under this non-system, because this is a non-system, this monetary system. The US's biggest export is debt, or the dollar. And of course, there's the petrodollar that has allowed the US to be able to do that, and the fact that other countries still use the dollar to buy commodities. The US is living on its laurels, so to speak, that the dollar, $35 was as good as an ounce of gold. And but I think we're coming to a how can I say, a period, or not a period, but a point down the road where, with the emergence of China as a major economic power, of course they're going to have major monetary power. Something needs to be done about this system, because it's not sustainable. Countries that are growing and export and run surpluses, they want to make sure that the system is run fairly, and also under a gold standard, or even a gold exchange system. It kind of puts governments and politicians in a straitjacket, and that's why they don't like it, because they can't grow their welfare state, even their warfare state. And I know there's a lot of saber rattling right now, but that's what it would mean, a gold standard discipline, monetary discipline. It would actually mean peace and prosperity, and people, countries in general, earning their way around the world. So let's, when I did my first video about trade wars being a cover for global monetary policy, I put a link to an article from Fortune magazine about Judy Shelton. It's from 2016, during the election campaign. And I'll go through it, because they interview her, and there's some interesting comments. So it says, this Trump economic advisor wants America to go back to the gold standard. So this is from Chris Matthews, August 18th, 2016. So I'll go through the article. It says, Donald Trump is no policy wonk. He is pitching himself as the best man for the presidency based on his track record as businessman and his ability to surround himself with the best people, not on his knack for writing white papers. This, of course, means that it is important for voters to understand whom he is surrounding himself with and what sort of ideas they hold. It goes on to say, with this in mind, Fortune reached out to Dr. Judy Shelton, one of two economists recently named to Donald Trump's economic advisory team, and the only woman to hold the title. Shelton is a senior fellow and co-director of the Atlas Sound Money Project, whose mission is to promote the principles of sound money and raise awareness of what they see as the inherent problems of the current monetary system. Dr. Shelton first rose to prominence when she predicted the economic collapse of the Soviet Union in 1989, 2 years before it transpired. I won't go through the whole article, but I'll go through the interesting parts here about gold. And they ask, the author, the Fortune guy asks, you've written before about going back to some sort of gold-based monetary system. Is that something the U.S. could do unilaterally, or would we need to convene other nations and get them on board? So this is what I think is happening, especially with China. They're not calling it global monetary system negotiations. They're calling it a trade negotiation, right? That's my speculation. So she responds, I'm not opposed to a new Bretton Woods conference, and if it takes place at Mar-a-Lago, I'm fine with that. But anything the U.S. does, because we print the international reserve currency, unilateral action would almost instantly be accommodated by other countries. I don't think it was, and that's why the U.S. is having to negotiate with China, because China said, whoa, hold on, before we go into this, we need a say in this as well. And she goes on to say, in terms of gold being involved, some people may think of that as a throwback, but I see it as a sophisticated, forward-looking approach, because gold is neutral and it's universal. It's a well-accepted monetary surrogate that transcends borders and time. If you look at foreign reserves of the most important countries, they keep them mostly in gold. I don't want to read too much into it, but it proves that gold is not some barbarous relic. The author asks another question. Would the first step in that be issuing gold convertible bonds? And she goes on to say, don't attribute this idea to the Trump campaign, but it has been something that I've been proposing for years now. A gold-backed bond was first proposed in 1981 by Alan Greenspan. I think the US should issue them as an experimental pilot program, similar to the TIPS bond. That compensates people who are concerned about the future value of the dollar. For those who are concerned about a big financial meltdown, these bonds would give them some insurance, as gold tends to rise in price during periods of financial stress. She continues, the Chinese would welcome this development because it would likely be a stabilizing force for the value of the dollar and protect their dollar holdings. I also think they are the most likely country to provide a parallel instrument. If China were to offer a similar instrument where 5 years from now you can get back X amount in yuan for an ounce of gold, 5 years from now both the US issued instrument and the China issued instrument are worth the same thing, an ounce of gold. So now you start getting projections of a stable exchange rate determined by market forces. If this practice starts to spread to even more countries, you'd start to see the semblance of a future stable exchange rate system, with those exchange rates being determined by what market forces believe about the future value of those currencies. This is another interesting part here, this question. What would you advise the Trump campaign about what it's being saying about trade? I like it whenever Trump says, I believe in free trade, and he says it all the time. What he doesn't like is allowing countries to engage in activities that undermine the principles of free trade. You can't homogenize the cost of labor or labor standards or environmental standards, but what you can do is address the problem of our international monetary system. It used to be economic doctrine that stable exchange rates brought about optimum financial flows and investment, and optimum decisions about where to produce goods, where to buy and sell goods and services. And I still think it's the case that the proper monetary foundation for genuinely free trade has to be stable exchange rates, that you can't manipulate currency to get an advantage. Currency manipulation is like saying you're competing in the 100-meter dash, and then at the last minute, one runner gets to redefine a meter as a centimeter and still be declared the winner. So that's why it's so important, in my opinion, and in her opinion as well, to have stable exchange rates. And you can only get that through gold, because gold is money, and it's the most stable store of value, and it's neutral and universal, as she said. There you have it. That's what Judy Shelton thinks about trade, gold, and trade negotiations, and the monetary system. Definitely interesting. Does this mean that gold is going to fly, the price of gold? I don't know, but whatever it does, even if this doesn't happen, even if we don't go back on a fixed exchange rate, stable monetary system, it's still a good insurance to have, monetary insurance to have, in my opinion. So what about the markets this morning? I'll just finish off, look at what the markets are doing. It's a little later today. It's 8:30 a.m. So yeah, the stock markets rebounded yesterday. Short term, yeah, we might see a little bit more strength, but I'm still not convinced. You know, if you look here quickly at the Dow weekly chart, it still doesn't look very good. So yeah, be careful out there. I think I think we're still set for more drops in the stock market. Right now, we've got gold, $12.95, so it's down just under $2. Range has been $12.93 to $12.98. So we're holding above that downward sloping trend line that I've been talking about from the falling wedge. Silver's was 1480, unchanged. Stock market this morning, the Dow's up 12 points right now, 25,550. S&P virtually unchanged, up a point. NASDAQ 100 future up 8, 7408. Pound currencies. The pound is at 129.05, also unchanged. Euro 112.03, unchanged. So fairly quiet, the markets. What about oil? Oil is down a little bit. WTI is down $1. WTI is down 65 cents at 61.30. Brent crude is at 70.40, down about 42 cents. 10-year yield is down 2 basis points at 240. So the bond markets are rising a little bit overnight or here early in Europe. Don't forget, there's a big U.S. Treasury OTC market, cash market in London. Before the U.S. comes in, it's where, yeah, it's a huge market, and it's been here for many decades. What about the yield curve? Well, we got the 3-month at 241. So actually right now, the curve is inverted from 3 to 10 years. So the curve's still pointing to economic problems out there. If you enjoyed this video, make sure you hit the like button. If you're not a subscriber yet, but enjoy my videos, think about subscribing. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.